Welcome to Multifamily Mondays. Really excited to be here with you today. We have a great show for you. Joel Block is going to be joining me in just a little bit. Joel, if you don't know Joel, he spoke at this year's Multifamily Conference. He is a specialist and ninja when it comes to not only raising a whole lot of money, but also how to structure it the most efficiently. So not only do your investors get the best product, but you as well. And it's all about making a profit. So really excited to have Joel come up in just a little bit. But first, we have some really big announcements to make. Well, number one, make sure you like and comment on this video. Actually, you know what? Put it in the chat. Let me know where you're watching, tuning in from today. I would be really interested to see where everybody is, both on YouTube and Facebook. So definitely put that in the chat and let me know. Like and comment on this video for a chance to win a free t-shirt. We've got Mogul in the making, and we also have the ever so popular Unit Size Matters shirt. I'm not wearing mine today because I spilled something on it just before this video. But on Wednesday, I will be back with my shirt. Also, at the end of this video, I will be announcing the winner of November's loaded elite ticket for the Multifamily Conference coming up in 2023. We've got Grant Cardone, Alex Rodriguez. Hey, Brian, you're from Guelph. That's awesome. Went to school in Guelph. So at the end of the live stream today, I will be announcing the winner for November's ticket. And if you want to get entered into the draw for December's free elite ticket, then all you have to do is like and comment on any one of these live streams, and Katie will automatically add you to the list. So really excited. So the topic today, raising money for real estate, because your ability to raise capital will directly impact how quickly you can scale and how much you can actually grow to, like your limit. Everybody has a wall, and your ability to raise capital, raise equity for your deals will directly impact on how big you can grow this thing. And when I first started in multifamily real estate, or I would just say real estate investing in general, way back in the day when I was doing the single family home stuff, I had a lot of misconceptions about raising money for deals and how deals actually were put together. You know, I had the mindset that, you know, you had to save up all your money and then you invested it in a deal. So you put all that capital in a deal, and then you waited for it, and then you could refinance and then do the next one. Or you had to wait and save up a whole lot more and then purchase the next one. That's how I did my single family home investing. I didn't understand that there was a totally different way to do things that not only would expedite the scale, like do it a whole lot faster, but also break down those walls that I was encountering, especially when it came to financing and equity that was needed to expand the portfolio. So, you know, I would drive by apartment buildings and I would look at them and think, oh, well, you had to be a loaded, rich insurance company. You had to be a very wealthy family who had multiple businesses and millions of dollars. I would think you had to be a big corporation to acquire these apartment buildings. I didn't realize how apartment buildings were actually funded and how individual people could not only do the deals, but also invest in the buildings. I was very ignorant. Actually, one of the first people, and which is why I invited Joel on here today, one of the first people who opened my eyes to that world is Joel Block. I remember I was doing a podcast, one of my very first episodes, and I was doing a whole lot of learning in real estate. And I had Joel on, and he came highly recommended, and we had a conversation after the episode. And he's like, hey, I want to show you some stuff. And he basically broke things down. I met him in Philadelphia, and he basically taught me how Wall Street raises money extremely well, extremely efficiently, and how I could use that in real estate. So I owe Joel a big debt of gratitude. Oh, hello, Kitchener, Ontario, home of the Kitchener Rangers. I've spent many a day in the odd refereeing the Kitchener Rangers. Now I'm washed up, but that was back in my younger years. So I owe Joel a big debt of gratitude for opening my eyes, and that's what I want to do for you today. Like I want to show you how the professionals actually raise equity, how they raise money, how their mindset is, how they go about doing it, and how they deploy that money in a deal. And that's exactly what Joel's going to be talking about. But first, I was running stats. Like with these live streams, I always like to pull up some interesting stats, and I learn things every single week because I don't know this stuff, just to share with you. So let's head over to the whiteboard. This is going to blow your mind today. Actually, every week I have mind-blowing stats. So the amount of money out there is crazy. So the question is, where is the money you need? Like, where's my money? You need money to do a real estate deal. Is the money actually out there looking for a deal? Where do you find it? All that sort of stuff. Well, the money is definitely out there. So let's call this, where's my money? This could be a regular segment. Where's my money? Okay. So interesting stat number one. So global private equity fundraising is up 20%. So I'm looking at 2021 numbers because 2022 hasn't completed yet. But global private equity fundraising was up 20% in 2021. And the total amount fundraised was $1.2 trillion. Now, this is on a global level. $1.2 trillion was raised for private equity. That is a huge amount of money. Now, private equity also, they raised 1.2 trillion, but they deployed in 2021, they deployed $3.5 trillion. We are talking huge money in this case, right? Up 20% in 2021 coming off of COVID, or I can't even say that on YouTube because I might get blocked. But what happened? The lockdown, up 20% in 2021, $1.2 trillion raised, but they deployed as a sector. Private equity deployed $3.5 trillion in private equity deals. Now, when I say private equity, we're talking debt, we're talking real estate, we're talking business, all of those sectors combined. But in North America, for real estate, so a total of $120 billion was raised for real estate. And this is for money seeking to invest in U.S.-based real estate. $120 billion was raised in 2021, and that was up 48% from 2020. And globally, so this is just U.S.-focused money looking to take down U.S. real estate deals. $120 billion was fundraised in 2021. Globally, $176 billion was raised on a global level for real estate. So there is a massive, massive, massive amount of money. There's a pool of money out there to tap into. Now, looking ahead, right? Because the market is shifting right now, and it is presenting a whole lot of opportunity for people. And the private equity space, the people raising these funds, they know something's up. So let me just walk you through this. So in terms of dry powder, so when I say dry powder and when somebody else says dry powder, it actually goes back to the era of flintlock muskets. I'm going to give you a little taste of my history geekiness right here. So basically, flintlock musket, you pull the trigger, a piece of flint goes down, it strikes, right? That's the hammer. It strikes the steel. It ignites a little bit of gunpowder in the pan, and that goes in to actually ignite the charge, and then the bullet fires. That's how a flintlock musket works. But if you got stuck in the rain, the powder in your pan would be wet, and then you couldn't fire your musket. So that's where the term dry powder comes from. So basically, dry powder is the powder you're sitting in reserve. It's ready to rock and roll. It's ready to explode. So in terms of dry powder right now for U.S. focused real estate, there in 2021, at the end of that year, there was a total of $215 billion sitting there. Not in a deal, sitting there waiting for opportunities. So private equity had $215 billion of money just sitting there waiting for an opportunity. And now with the market starting to shift, this money is starting to be deployed. So globally, so this is just US focused real estate. Globally, there is $1.6 trillion sitting there waiting to be deployed on a global level. This is the dry powder of private equity right now. And just to give you a taste of some of the really big heavy hitters and what they're doing right now, Blackstone, everybody knows Blackstone. If you don't, they are a beast in the space. So in 2021, they deployed $25.3 billion and they raised $33.5 billion. So they raised more money than they actually needed because this was sitting in their dry powder reserve. So right now, there is so much capital just waiting for opportunity. Now, the question is, where are you going to find your money? Because Blackstone, like real estate is a very fragmented industry, right? So if you look at only the top real estate holders in multifamily, you've got the big companies like Blackstone and the other big ones, but real estate as a whole is very fragmented. You've got a ton of mom and pops holding real estate. So the question is, the big boys do things at the top, but there's a whole lot of money there waiting for opportunity in the mom and pop space. You don't have to be a huge life insurance company. You don't have to be a huge conglomerate to wrap up these deals. You can do it yourself. And that's exactly what I'll be going through with Joel Block in just a little bit. How can you tap into this dry powder reserve right here? $215 billion just sitting there waiting for a deal. 1.6 trillion globally just waiting for a deal. If you could only get a small, tiny piece of this $1.6 trillion, you can use that to fund your real estate portfolio. And that is exactly how the pros approach raising capital, and we'll be going in their systems and their funnels and how they actually do that. So really excited to have Joel on right now. So let's go back over to the desk. I think Joel was having some email issues, so we'll work to get Joel on here after the break. I know he emailed, or he had texted me right before we came on saying he was having some issues with his email service provider. So just a quick reminder to like and comment on this video. Let me know where everybody's from. I know we had a ton of comments flooding in. We had North Bay, US. We had somebody on. Somebody on LinkedIn. I can't see the name. So somebody's saying that's 40 years ago, Seth. Somebody is, I'm not sure who that is. It just shows me random LinkedIn user. Anyways, like and comment on this video. Let me know where you're tuning in from, and then we will automatically enter you into the t-shirt drop. So do we have to write a mass letter, Seth? What? I'm not sure. Okay, we'll deal with that later on when Joel's on. So let's take a quick break. We'll head over to commercials, and then hopefully Joel is with us when we come back, and we'll dive into the capital raising secrets of the pros. Stay tuned. All right, welcome back. I was just been texting Joel literally right now. He was waiting on Zoom, but we use something called StreamYard. So he'll be on any minute now. So before we get started with Joel, I just want to tell you like my own story in terms of how I approach raising capital. I alluded to it before. I had these misconceptions. I would be driving by these apartment building deals, and I would have no idea how I would even go about investing in one of these, acquiring one of these. I didn't know what was needed. So basically what I did was I started interviewing some very successful real estate investors, and I ended up doing, I think it was like over 500 interviews over the podcast episodes, the YouTube episodes, and even just one-on-one. Even with my TV show, we had some very successful people on the show. And basically what happened was, I started seeing similarities between everything they were doing, right? Everybody's got their own style. Everybody has their own twist on how they do certain things, but there were general themes that really stood out in terms of how they got started, how they consolidated their success, and how they grew for the future. And I was like, you know what? Like, I started taking some notes and really organizing in my brain. I'm like, okay, well, how can I put this down into a system? And eventually it just kind of dawned on me. I was like, you know what? There's actually just 3 basic steps, and then there's sub steps to those. And that's how I came up with what I call the SPY formula. And if you watch this live stream, I talk about it all the time, the SPY formula. So basically it's shift, prime, and invest. Those are the 3 stages. And this is based on literally thousands and thousands and thousands of hours of investor conversations with some very successful people. And basically what I did was I took the similarities. So I cut through the unique twists and the unique spins on different subjects, but I cut through to the meat and potatoes of it. And basically, I created the SPY formula for that. So if you go to spyformula.com, you can actually download a free copy of that. It's a free PDF that I have available. And it basically walks you through, it's an infographic, and it walks you through all the different stages of the SPY formula. I don't see Joel yet on the screen. So hopefully we're not having catastrophic tech issues right now. That would be not a good start to the Monday. So let's go back to the whiteboard and let me cover some of the stuff I was going to ask Joel about, and we'll just head right on into it. So let me grab my notes. So basically, when you're talking about raising capital, right? Like, the first question is, how do you know you're ready to raise capital? And that's a question I had when I first started out. You know, when I was doing the single family home investing, I wasn't even in the right mind space to go out and raise money because I didn't understand how it worked. I didn't have my systems in place. You know, I had no business going out raising money at that point. And that's kind of, you know, I alluded to the SPY formula, the shift, prime, and invest. You know, that's part of the shift process. You really have to shift your thinking. And that's a process that took me, you know, a while to go through, because I was learning. I didn't have a system to follow. I was kind of making mistakes as I went. So as you shift your mindset, you really understand that Wall Street is the capital raising machine, right? Wall Street does one thing really, really well, and that is they raise a whole lot of money and they deploy it. So one of the things I did was I studied Wall Street, and okay, well, what are the systems they're following? How are they actually attracting investors? How are they raising the money, and what are the structures they use to deploy it? And 2 of those structures really stand out. The first structure is called syndication. And the second structure is your fund structure, right? So we talked about this last week a little bit. I'll just give you a refresher in case you weren't on, right? So a syndication is used on a deal-by-deal basis for a single project, right? So a syndication, you'll have all your investors over here. These are the passive investors, people with not necessarily the experience, but they have money, but they want to, but they don't want to devote the time and the energy they need to basically start a real estate investing business from scratch. So they pull their funds right here. Then you have something called the general partnership, and these are the people who make the decisions in the project. So the LPs over here, the limited partnership, they invest their money over here, and the syndication then takes down a single project, right? So it could be an apartment building. You can syndicate, you know, movies. You can syndicate basically everything. That's what Wall Street does. But we're applying this to real estate. So and any of the profits get split according to a split, and there's lots of different nuances on how you can structure things and customize it. So with the fund structure, the fund is very similar to a syndication where you have your limited partnership, the LPs, and then you have the fund manager, the GP over here. But instead of doing a single project, right? Instead of doing a deal-by-deal project, the fund actually has a life of its own, right? So it will acquire a property, it will sell a property. The fund can even do different rounds and raise more money and bring in more investors to add fuel to the fire, so then it can go out and acquire and divest of different real estate. So those are the 2 structures that Wall Street uses really, really well. And they do an excellent job. So the question is, well, how can you right now, whether it's you're doing your first deal or your second deal, how can you actually go out and find investors? And where do investors live? Like, if you're starting out right now, where can you even find investors? Well, investors are basically everywhere. And generally speaking, you're going to be working with what's called accredited investors. And it doesn't matter if you're in Canada or the United States. Accredited investors, they follow basically the same rules. And the reason accredited investors came about was, if you go way back to the 20s and 30s, basically you have the snake oil salesman going from town to town. They would make these wild claims, take the Grandma Josephine's very last dollar, and they would never be heard from again. So basically they were swindling the population. So the government said, hold on a second. We need to make sure that if somebody's going to invest in a stock, right? If they're going to invest in an opportunity, they basically have to know what they're doing. And there were a whole lot of different rules that that got put into place. And basically the securities the people offering the securities said, listen, hold on, like what you're having us do right now with all the legislation is really expensive. Give us an out here, like give us a way to do things. And that's where the government said, okay, well, if somebody actually meets an income threshold or a net asset threshold, they probably have access to a lawyer. They probably have access to an accountant. They probably have access to all of these different things. They can probably get wise counsel and make educated decisions. And that's where the exempt market came from. And if you are raising capital for a real estate deal, chances are you're going to raise it from the exempt market. So who is an accredited investor? Well, there's an income, and then there's a net worth. So with income, and obviously you want to check with your local, with your country, but everybody's a little bit different. In the US, you have federal and then you have state level legislation. And in Canada, it's going to be provincial. So every province is roughly the same, but there are some minor nuances. So for income, you have to earn $200,000 a year or $300,000 as a couple, and then a net worth of $1 million, not including your primary residence. So you can't count your primary residence, but if you have insurance policies, if you have cash, if you have gold, silver, stocks, whatever it is, if you have your net worth of $1 million, not including your primary residence, then you can qualify as an accredited investor. And there's other ways you can do so as well, but for today's purposes, we'll stick with the two most basic ones. So it doesn't have to be both. You can choose to qualify through income, or you can choose to qualify through net worth, either one. So where do these people live, right? Where can you find accredited investors? Well, they're everywhere. You look in different sectors, right? Lots of accountants, they'll meet this. Lots of lawyers, they'll meet that. Doctors, healthcare professionals, people who work in tech, business owners. You just have to think in your brain, okay, well, where can I find people making this type of money? And they're at your local golf club. They're at your daughter's gymnastics lessons. They're everywhere. You just have to know where to find them. And chances are you go to the dentist. You can have conversations there. You go see your doctor. That your doctor knows other doctors. And that's how you start building your network. And when we are raising capital, we have to follow. I'm a big fan of funnels. And we can thank Mr. Russell Brunson for making the concept of funnels very popular, right? So you have a funnel like this. And basically what you want to do is you want to load the top end of your funnel with prospects, and then you're going to work them through a process to eventually spit out an investor that likes you, trusts you, and is ready to rock and roll with with a check for your deal. So basically at the top, what you have to find is some sort of lead magnet. And depending on your niche in the specific type of real estate, your market, you could advertise, you could try and get investors from all over the country, all over North America. You could focus on a single specific area, maybe the town or the city you live in. You really have to figure out what works best for you. How can you touch the maximum number of investors? How can you maintain those relationships? How can you bring people into the top of your funnel? And through a lead magnet, this is exactly how you do it. So it could be a PDF report. It could be a case study. It could be a video series. It could actually be a live event where you bring in a couple high net worth experts. Maybe you have a family office planner come in and run a workshop for how to start your first family office and target people in a specific demographic. You could have an accounting professional come in who deals with high net worth families and run basically a workshop for them on maybe some accounting practices that they might not know about. All these different things are lead magnets. It doesn't have to be a physical thing. It doesn't have to be a digital thing. anything you can think of that a prospective investor would be interested in. Now you can further niche down, right? Some people focus solely on medical professionals, on doctors, on physicians. So all of their marketing material, all of their lead magnets are focusing on healthcare workers. Their messaging is very healthcare focused. Their examples, they always use doctor examples. Everything is focused on that. So first of all, you have to figure out, well, who are you going to focus and where are they? Once you figure that out, you have your lead magnet. You have it set up, whether it's a physical event, in-person event, digital product, whatever it is. Now you're going to actually get people into your system, because for the lead magnet, you're going to ask them for contact information. So if they're showing up to your soiree where you have, let's say a family office expert come in and talk about how to set up your first family office, you're going to get their mailing address, because you're going to send them a thank you note and maybe a gift after. You're going to get their phone number, their email, all the basic contact information. Same thing for an online thing, right? Somebody downloads a lead magnet, just like spyformula.com. That's an example of a lead magnet. You're going to give your email address and your name in exchange for the lead magnet. It's an exchange of value. So once that happens, you're going to bring people into your CRM or whatever system. You can run an Excel page if you want to. You can get a really fancy CRM, whatever you choose to do. Now you have to basically figure out who these people are, and you're going to qualify them. Because what will happen is, and this is the whole concept of a funnel, if you have 1,000 people come in the top of your funnel, not everybody's going to make it down to each successive step, right? And this is exactly what Wall Street does. They do a lot of prospecting, and they have their own internal funnel system that moves people down. When you qualify the lead magnet, you're going to have a conversation. Hey, thanks for coming to my event. Hey, thanks for downloading my free PDF. Hey, thanks for downloading my case study. All these different things you're going to you're going to reach out, and then you're going to ask some qualifying questions. What are your investing goals? What experiences have you had before in this asset type, if any? What else have you invested in? What did you like? What didn't you like? Basically, what you want to do is you want to paint a picture of what this person, what they really need, what they're looking for, and how you can help them. Because not everybody who downloads your lead magnet will be a good prospect, right? You have lots of people who are just genuinely curious, but they don't meet your accredited investor definition. If you host a free event, you're going to get people who are just curious. So now it's kind of like you're sifting sand for gold. You're going to put your sifter down, your sieve in the river. You're going to shake it, and you basically want to end up with the really valuable stuff in there. Oh, and then we have Joel is here. Okay, let me stop right here because Joel can chime in. So let me pull up Mr. Block. All right. Joel, what's up?
Seth, man, I am sorry to be late here, man. I think they must have had a ransomware attack or something on my email provider, because I haven't gotten emails over the weekend, and I'm really sorry about that.
Oh, no. All good. All good. We are live. We got people tuning in from all over the place, so we'll just dive right into it. I was just to catch you up. I gave people a brief overview of how Wall Street does one thing really, really well, and that's raise a whole lot of money. Everybody right now, the topic is how can we actually raise capital for real estate? I covered how you can find investors. So I guess, Joel, like the first question is what are investors actually looking for in a deal? What are they after?
Well, let's put it like this. Let's divide real estate investors into two different buckets. There are the active ones who are busy, buying, selling, working with tenants, doing repairs, doing all the things that real estate investors do. The second group are passive people. These are people who are busy working at their jobs or in their businesses, and they just want their money to work as hard as they do. That's really the goal, is for the money to work as hard as they do. A lot of times, the people who want to get their money working don't have the skills to find real estate. They don't have the network to find real estate. They don't have the wherewithal to negotiate, and they don't have the time because they're busy. And they really would like to get onto the team of somebody who is better at doing this than they are. I mean, in general, we form teams. I mean, that's the way that things happen, is we form teams. And if you're really good at finding deals, then, get on a team with somebody who's really good at finding capital, and get on a team with investors who want to give you capital. And that makes a team. That whole group is really strong. So I would say that most investors who are passive, they're not looking at the specifics of a deal. They're not looking to say, gee, I want a certain cap rate, and I want a certain revenue, and I want a certain this and that, and I want it. They're not that particular. What they want is they want to find somebody who knows what they're doing, that can steward the deal through hard times and come out on the other side doing well. That's what investors really want, is they want success so that their money works as hard as they do.
Gotcha. So I guess then, if let's say somebody is starting out right now to raise money, they haven't raised funds before, where do they actually start?
Well, listen, the first thing that you have to do is you have to, let's assume that you had a whole bunch of investors, and most people don't, but let's assume that they did. You have to be able to show investors something that they want to invest in. I mean, you have to show them something that's going to work for them. So that's number one. Number two is, where are these investors? Well, investors are everywhere. Investors, there are people that have capital that want to put that money to work, that want to enhance their returns, and they're just everywhere. I mean, they're literally in bars and restaurants, they're in lobbies, they're on elevators, they're in escalators, they're everywhere that you go. You just have to talk to people and let people know what it is that you're doing. So if you're looking for these deals and you're putting deals together, then what you have to do is you have to say to people, listen, when somebody says, what do you do? I put together real estate deals and share the profits with my investors. Now, a lot of people are going to change the subject, or they're going to talk about something else. But there'll be a few people that say, gee, that sounds interesting. How do I get in on that deal? And if people say that to you, then you have to be able to say to them, you have to give them something that piques their interest and attracts them. And Seth, you and I have been working on this together, and you know that takes a lot of practice. In fact, interestingly enough, Seth, there's a guy you don't know, but he actually is in the process of just about done building his fund. And I really, one of the things we do, because we help people build these structures, these funds, syndications, these capital raising vehicles. And I really force guys to get really crystal clear on what it is that they do. And so this particular gentleman had an opportunity to go on the evening news in Texas recently. And he was able to describe what it was that he was doing with incredible clarity and great language, because we had worked on it really hard. So you have to really be crystal clear about what you're doing. And, Seth, from working with me that this is a little harder to do than it seems, right?
Yeah, like it's clarity. Like, I think one of the things that's really beneficial is going through the exercise, because when you're first starting out, like, you don't even know what exactly it is you're doing. So if you don't know what you're doing, how can an investor actually buy into your business plan anyway, right? Like, you have to be laser focused and know exactly what you're doing, and then figure out the right messaging to that investor.
Right. You can't say to an investor, look, we're gonna buy really good real estate that we can make money on. I mean, that basically says nothing to no one. That no one gets any value out of a statement like that. So you have to be able to say, listen, our goal is to find distressed real estate, and we're going to rehabilitate it, and it's going to be in these kind of neighborhoods, it's going to be in this part of the country, and this is what we're doing. And you have to be able to tell people with great clarity what it is that you're doing, because if you don't have that great clarity, then what ends up happening is that investors, they just end up going looking somewhere else. So to me, it's number one, it's about talking to everybody. It's about starting to catalog what people are interested. It's about, giving people a compelling story. And then you have to have what's called an industry standard deal. And an industry standard deal is something that they recognize, or their accountant or their attorney recognizes when they see it. You got to remember that these attorneys, these accountants that advise these higher net worth people, they all went to college, and they all studied how these kinds of transactions work. So they recognize what an industry standard deal is. And we try really hard to make sure that our clients, at least, develop these industry standard transactions. So they have a preferred return. In other words, the investor gets paid something before the promoter gets paid, because the investor is the one that put up the cash. That's number one. Number two, you want to make sure that the way that the splits are working is reasonable, and that the amount that you're taking is reasonable. and then it not only is reasonable, but it also kind of matches what other people are doing. It's in the ballpark. So I frequently will be asked by courts of law or attorneys in judicial cases here in the United States, what's a reasonable split with investors? Well, again, the answer, it depends. So if you buy a AAA apartment building and all you're doing is collecting rent, maybe 5% is the right percent. And a lot of family offices do these 95-5 deals. But if you're doing a rehabilitation deal where you're really getting in there and you're really working hard, 30 or 40% to the promoter might be right. And if you're doing a construction deal from scratch, a development transaction, 50-50 might be right. So it really depends on what you're doing. And because you got to remember that it's not just the investor who's going to look at this. There are other people, the attorneys, the accountants, and other people are going to look at this. And if they don't see something that feels right, they're going to make up an excuse about why they're not going to invest. Something stupid like, I totally forgot that my daughter's getting married in the summer and I need all the money to pay for the wedding. I mean, they're going to come up with something ridiculous that just throws you off, and then you really never know the truth. But the truth is that if you don't get people to say yes, if you're talking to the right people at least, and you need to be talking to the right people, then you absolutely have to give them something that is investable, that's investor friendly, that they like and that they can move forward with.
Yeah, it's like the example of somebody comes on to Shark Tank, let's say, and they try and pitch a brand new product in a brand new niche in the market. It's the sharks always say it's going to take too much work to actually educate the consumer about what this product is, right? So you want to kind of go where the market is already, right? They already have buyers.
Yeah, and you know what, Seth, what happens on Shark Tank often is that people will invent solutions to problems that they don't even know what the problem is. They'll just create solutions. Well, who has that problem? I'm not really sure. Well, how many people have this problem? Well, I'm not really sure. Well, if you're not really sure, then if you don't have that level of clarity, you're not getting money from the sharks. So that's a great example. Same thing is true in real estate. If you don't have clarity about exactly what you're doing, exactly what you're looking for, I mean, you're aiming the gun at some target. And if you don't have the target in your sights, then who's going to bet on you? Because investors at the end of the day, they're betting on you. And if you don't have that level of clarity, no one's going to be placing their bets.
Yeah, no, for sure. Let's go back a little bit. You gave us an example elevator pitch. If you're meeting somebody, talking with someone, if for somebody starting out raising capital, because this is a question we get all the time, how do you actually start meeting these people? Do you have to go to golf club events? Is there a way to advertise? Like, how do you start bringing investors into your sphere?
That's a really good question. And the answer, number one, is you have to be clear about what you're looking for. Before you ever go anywhere, do anything, talk to anyone, you have to know what you're looking for. I would imagine that most earlier stage real estate people probably know lenders. They know hard money lenders. They probably know private money lenders. And the reason that they know those people is because that's what they're looking for. That's the kind of person that's in their sphere. So in other words, let's say you go to a real estate investment club or a real estate group, a meetup of some kind, and you're meeting and talking to the people, and you say, listen, I just found a really nice deal and I need to get some money to take it down. There are lots of lenders around. Well, that's not really what the kind of money is that we're talking about, because lenders are really easy to find. Lenders are everywhere. And people will put themselves out there because they're making money on their transactions. So they're actively looking for you just like you're looking for them. But the kind of real estate investors we're talking about, which put up money that really becomes the equity or the down payment for the transaction, those people are a little harder to find. So what you have to do is you have to say something like what I said earlier, which is, so Joel, what business are you in? You know what? I buy real estate and we share the profits with our investors. Oh, you know what? I'm interested in learning more about that. I'd like to be involved in a transaction like that. How do I get involved in something like that? Well, what I would suggest to listeners is that they write down the names of the people who say that, and then maybe ask them another question or two, like without making any kind of commitment. If I found something, what would be the ballpark number of dollars? I mean, are they talking about 5,000? Are they talking about 50,000? Are they talking about 250,000? So you might want to make a note in your Excel spreadsheet that you start creating when you make lists of people, that this person likes apartments. They might have $100,000 to invest, and they might be ready to do that sometime in the next couple of months. That's great. So now you start making a list. My experience, and I've been doing this for a long time, my experience is that if you were to create a list and that list had $5 million worth of people and the commitment side, yeah, I'll put in 250, I'll put in 100, I'll put in 50, I'll put in 75, whatever the numbers are. You add all that up, and let's say it adds up to 5 million. My estimation is when you go out to raise capital, you'll collect 25% of that number. And that's a really reasonable expectation. So if you need to raise $1 million, then you need to have a spreadsheet that has $4 or $5 million worth of people on it. And you start creating that list right now. I wouldn't wait for you to have a deal. We don't have a deal right now, but we'll have one in the next couple of months. And if you'd like me to call you, just give me your email address. I'll put you on our list and I'll let you know that this is happening. It's very painless for people. My experience is the Canadians, Americans, we're all very curious people. We're all interested in knowing what's going on, especially Americans, by the way. They don't want to miss out on anything. And so they're very happy to participate in that. They're very happy to hear from you in the future. They may not say yes, but they don't want to miss out on an opportunity that could be really special. So your job as the promoter or the would-be promoter, let's say, is to start making a list. So Seth, when they come to your event in May, they've got a list of people that's $5 million long. And when they start learning some of the advanced techniques that we're talking about here, they're ready to go.
Yeah, no, 100%. So I guess if somebody doesn't have a current deal that they're working on, what do they even say to the investor? Like, how can you keep top of mind with that person if you don't have a deal right now that they can invest in?
Let's put it like this. You may not have a deal, but let's say that you're partnering with somebody that might have a deal, or let's say you're a bird dog for somebody who's a deal finder for somebody else. You need to create a team. If you don't have all the experience and you're not busy doing all this yourself, and then you want to make sure you're dripping on these people. When you say top of mind, what you're talking about is dripping on your list. If you write down this list of people and you don't contact them for 6 or 8 months, they're not going to remember who you are when you contact them. So you have to send them a little email every 2 or 3 weeks and say, hey, listen, our group just did another deal. We just took down a little house, rehabbed it, sold it, did whatever we did, made some money. You're not offering them anything. You're not inviting them in. But what you're doing is you're kind of whetting their appetite. You're saying, hey, you know what? When I reach out to you pretty soon, when I have something that's suitable for you, these are the kinds of things that we work on. And that's a really cool thing for anybody. Anybody can do that. It's very simple to do that. I would encourage everybody to do that, is to kind of create a tribe or a community of people who follow them, that want to be involved in their deals when that comes, so that when you finally have a deal, you're ready to go.
Yeah, 100%. Now, speaking of advertising to the list and everything, one thing I see people do all the time on social media is they'll post the current deal. They'll say, hey, these are the returns you're going to get. Contact me to, invest right now. That is not compliant. So how can we actually do things like that, but in a very compliant way?
Yeah, that's not compliant in Canada. And it's only compliant in the United States under limited circumstances. So I don't like to do that. I don't like to say, here's how much money you're going to make. Who wants to buy shares? What I say is something along the lines of, these are the kinds of transactions that we do. If you'd like to learn more about it, if you want to brainstorm about real estate, if you want to kind of have, kick some ideas around, why don't we set a time on my calendar? Here's the link to my calendar, the appointment link. Click on this link. And here's why I use an appointment link, is because I think that selling is a lot like playing baseball, volleyball, where you're throwing a ball back and forth. So Seth, I throw the ball to you and say, Seth, would you like to be involved in anything I'm working on? And you say, yes, I would. That's you throwing the ball back. And then I say, okay, great. If you'd like to, learn more about one another, if you'd like to get to know one another a little better, why don't you click the link on my calendar? I send you the link. That's me throwing the ball back. If you don't click on the link, then you drop the ball and the game is over. And that tells me that you're not interested in having that discussion. If you put your name on the link, if you click the link and you put your name on my calendar, we get on the phone, we talk, then the ball continues to go back and forth. And the more it goes back and forth, the greater the opportunity is for us. So you have to, kind of give people a little bit of a test. And the test is, are you going to throw the ball back when I send it to you? And you give them a link. And if they give you the ball back, then you're continuing to create something that's valuable. And if they don't, then the body language is very clear. And the body language is, listen, I'm not really interested, but thanks for reaching out. And that's okay. And you have to be okay with that, because not everybody's going to be your customer. And the best salespeople know that they're not going to close everybody. So stop focusing on the people who are not going to be your customers and start giving more love and attention to the people who probably will be. And that's the way you successfully sell. And when you do that, then you're going to, start to have some success that will be very great for you.
Yeah, and at that point, it becomes a mathematical exercise. How many leads do you have to generate to get X number of appointments, and from those appointments, how many? It's just math at that point.
Yeah, it becomes a little bit of a numbers game. But the bottom line is, so back to your point about advertising, I don't advertise. I don't like to tell people, publicly what's going on. I think that that's something that is better done privately. And, even though in the United States, we have the 506C regulations, which allow you to advertise, my experience is that very, very few people are successful with that because they don't really know how to use advertising on the internet anyway. I know, Seth, you're really good at this. You drive a lot of leads from Facebook, and I'm sure you drop an enormous number of dollars to generate those leads. And so you have to calculate how much your leads are worth. Most people who are in the real estate business don't have the business savvy to do the kind of advertising campaigns that are required to generate high quality leads. That's why it's a lot of the crowdfunding sites that are using these kinds of things. And even those have marginal success. So I would focus instead on meeting people, sending them an email, following up, putting them on your list, creating a relationship with them. And then you go to the next level with those people. To me, that's really a better way of creating the kind of relationship that turns into some money.
Yeah, excellent. And when somebody does click your link and they book that initial conversation, how do you structure that conversation? Like, what sort of things should you be talking about there?
Well, the first thing is, I ask the person, why did you click the link and what do you want to talk about? Because they perceive that you're an expert. The fact that you're the one that is receiving their inquiry, you're an expert and they want to know from you. So listen, you put the appointment on my calendar. What would you like to talk about? Well, you know what? I've got a little capital. I'd like to put it in the real estate markets. I'm a little dissatisfied with how the stock market's going. I'm a little nervous about that. And I want to put my money into some hard assets because every day I wake up, my money's worth less in an inflationary environment. And so I want to make sure that I put it into something that will be there tomorrow, no matter what happens with inflation, because real estate is a very good hedge for inflation. So that's well known. So the person is going to say whatever they're going to say, and you respond. And you know what? If you really know what you're doing, if you have a level of clarity, you should be able to answer every question that the person asks you. There may be some things that are specific or technical or detailed that you may not have worked out yet, or whatever the reason is, and people will understand that. But if you can answer 80% of their questions and you can do it with confidence and gravitas and with some power, they really appreciate the fact that you're telling them, hey, listen, I don't know the answer to that one. We haven't gotten there yet. We haven't decided that yet. They respect that a lot. And that's something that all of us can do.
Yeah, 100%. And after you have that initial conversation, obviously you will add notes into your CRM or your Excel spreadsheet, however you're organizing things. And then you start, like you said before, you start dripping, right? Keeping top of mind with them until you actually do have that opportunity.
That's right. And and then at some point you're going to have a deal, and you're going to call them on the phone and you're going to say, look, today's the day. We found a deal. We're closing on it in 2 weeks from Friday, or whatever the timing is. And, we have something. Or if you're setting up a fund, which gives you more discretion so you can buy many different things, you say, look, we're putting together a fund. We're not just buying one property. We're going to put a whole bunch of different properties in there. And if you'd like to be involved, we're going to start taking our capital in, pretty shortly. Would it be okay if I send you the documents for the fund? And if the person says yes, great. If they say no, then that's what they say. So bottom line is, there are lots of different ways to go about this. And I wouldn't tell somebody who it's their first day in real estate, but if you've had a couple transactions and you've got a little track record that you can point to, or if you and another person as partners have a track record that you can point to, then this is something that could work out for you.
Yeah, no, that's great. Well, what I want to do now is let's go to some questions. So if you have a question right now for Joel, let's put that in the comment section, and we will go through some questions here because we've got about 10 minutes left. So somebody on LinkedIn, sorry, we don't have your name. It says, do we have to write a mass letter, Seth? I'm not sure what that means. I think they're talking about in terms of marketing for the funnel. I think they're getting to email follow-up, Joel. So, when somebody first contacts you, do you have a set sequence of emails that you send them to give them a little bit more information?
I don't have that set for investors. I treat every investor separately. I have not institutionalized investors. So there are groups of people who I do have kind of standardized materials. But every investor is unique. Every investor has their own problems. And the investors are really the top of the mountain. They're really the people that really make our business work. And if somebody asks me a question or asks me whatever, I make sure that I deal with them directly, personally, specifically, and professionally. I don't just try to standardize an email and send it out to everybody and pretend that it's going to work for everyone. I think that's a little disrespectful for investors.
Yeah, 100%. We had another question. So in terms of accredited investor criteria, they're asking if they need to qualify based on income or net worth, or so they're saying, is it either $200,000 of income or $300,000 as a couple, or my net worth of $1 million or more? They're just not really sure how that works. Can you?
Yeah, so it's kind of in between those things. So, and these are the United States rules. I'm not commenting on the Canadian rules, which are probably similar, but I'm not
very, very similar. It's almost the same.
Yeah. So here's the way it works in the United States. It's either 200,000 income as a single person or 300,000 as a couple, or $1 million net worth. But the $1 million may not include the equity in your personal residence. So it's excluding the equity in your personal residence. And it's either one of those two things will qualify you as an accredited investor. Now, under the 506B rules, the old rules, you just self-certify. You say, yep, my income is good. My net worth is good. I'm good to go. And they sign under penalty of perjury. Under the 506C rules, which are the rules that allow you to advertise and generally solicit, those rules, you actually have to verify their income. And you can verify them through a service by going to a stockbroker, their attorney, their CPA, none of which especially likes to verify these things. But there are ways to get them verified through services and so forth.
Gotcha. Perfect. Katie, did we have any other questions that pop up? Maybe we'll do one more if there was one. In the meantime, and then I will have a big announcement here. Oh, Katie says no more questions popped up. We had a ton of comments. We had people from all over the place. Somebody even saw United Arab Emirates was on the live stream today. So that's pretty cool. All right, Joel. One last question. How are you making connections with potential investors to get them to book appointments with you? That's from Brian.
Well, again, let's say you meet somebody in a restaurant. You meet somebody in a sports bar. Let's say you meet somebody at a golf outing. Let's say you meet somebody at a meetup group. Wherever you meet them, doesn't matter. They say, "What do you do?" And you say to them, "I do real estate deals, and we share the profits with our investors." If they express interest, you capture their information, you put them into your list, and you start dripping on them. And every drip that I send out always has a link to my calendar, which allows them to make an appointment. So my list is always growing. It's, you can go on LinkedIn and you can reach out to people that you meet and say, are you interested in talking about real estate? I mean, that's maybe a little more forward, and a lot of people don't like to be contacted via LinkedIn. But you can meet people in any way. You can meet them at your church or in other places where you go and gather. And, you don't want to be pesty. You don't want to be a person whose reputation is that you're always haranguing them about getting into your deals. I would be very, very ginger about this sort of thing, because that doesn't, if you remember that guy, Ned, in the Groundhog Day, he was the life insurance salesman. You know,
Yeah.
he was a lovable guy, but he was he was a nuisance, right? So you don't want to be that guy. You want to be somebody who's a lot more approachable and a lot more easygoing. And you just drip on people. And you know what? Here's the one thing that salespeople and people who raise capital cannot control. We cannot control timing. You know, we can be in front of people, but you don't know what their timing is. They may have something going on in their life. They may have just gotten involved in another deal. They may have had a problem. They may have a health issue. You don't know what it is. So you keep dripping on them. And ultimately, when they're ready, they will respond and they will send you a note and they'll play a little bit of volleyball with you. And if they don't play volleyball, then you know what? Then it's not meant to be and it's not happening.
Yeah.
And that's how you have to look at it.
Yeah, for sure. We just, we'll do the last question. Mamta Holmes is just wondering more details in terms of how you attract investors. Joel, I think it comes down to creating curiosity, because unless you create curiosity for somebody, they're not going to contact you to find out more. Is that how you would approach it?
Listen, I love curiosity. I think curiosity is one of the great underused sales tools that there is. And, you know, when you say to somebody, you know, we do real estate deals and share the profits of the investor with our investors, that's creating a little bit of curiosity. It's creating a little bit of FOMO, fear of missing out. It's creating all sorts of emotions. And if the person is attracted by that, then they'll say, hey, I want to talk more about your deal. Or if they're not attracted by it, then they move on and they just go and do whatever they do. And that's really kind of the way it works. So I think curiosity is awesome. And, you know, but the bottom line is that any good networker knows they have to talk to everyone. You have to just talk to people, and you don't have to sell them. You don't have to press them. You don't have to, harangue them. But what you do have to do is you have to have a nice, friendly conversation.
Yeah. No, 100%. All right, beautiful. We are almost at the top of the hour. So, Joel, just want to say thanks so much for popping on and giving us some really good nuggets in terms of how to approach raising capital and how to do it like the pros. So, thanks so much for joining us today.
Happy to help, man.
Yeah, thanks, Joel. Before we end today, I have two big announcements to go through. Number one, we have a winner for the t-shirt today. They liked and commented. So the t-shirt winner is Tammy and Calvin from Kingston, Ontario. So we're going to send you a free t-shirt, the Unit Size Matters shirt. You just have to get in touch with Katie and just leave a message here. Katie will get in touch. We just need your t-shirt size and your mailing address, and we'll send that out to you. And the big loaded elite ticket right now for the multifamily conference coming up May 26th to 28th, 2023. Grant Cardone, A-Rod, all the details are at multifamilyconference.ca. But the loaded elite ticket winner for November is Sharif Mohammed Gad. Sharif, congratulations. You won a loaded elite ticket to the multifamily conference. That gets you into the Friday workshop. So basically, we're doing an intensive workshop on the Friday. That's all day, just to get everybody primed for the Saturday and Sunday. And then it also gets you into the official after party at Rebel Nightclub. Basically, I rented out the top nightclub in the city, and we are going to be partying hard on the Sunday after the conference. So congratulations, Sharif, for winning that ticket. We'll be in touch. We'll be in touch with you to get all those details sent out. So thanks so much for joining me today. I will see you on Wednesday for Wealth Wednesdays, 12 p.m. Eastern Standard Time. Until then, happy investing, and I'll see you then.